Hello and welcome to Virtual Investor Conferences. My name is Phil Carlson, and on behalf of KCSA Strategic Communications, as well as our co-host OTC Markets Group, we're very pleased you have joined us for our next live presentation from Zone Properties. Before I introduce our speaker, a few points to note. Please submit your questions in the questions box to the left of the slides. If you're interested in scheduling a meeting with Zone Properties, please click on the Meetings tab found in the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Brian McLaren, Chief Executive Officer of Zone Properties, which trades on the OTCQB venture market under the symbol ZDPY. Welcome, Brian.
Great. Thank you so much, Phil, and really appreciate y'all inviting us to join the cast here. And thanks to OTC and your whole team, Phil. So we're very excited to be here. For the audience and anyone that isn't familiar with us, our company is Zoned Properties. I am the Chairman and Chief Executive Officer, Brian McLaren, and we are a real estate development firm focused on the regulated cannabis space. We've been at this for nearly a decade, and our model and our company's position in the sector has evolved into a point where we've got some really exciting momentum. I'm going to go through a lot of that information, what we do as a company, what the cannabis real estate market looks like as an overall landscape, and how we've positioned Zoned Properties and our ticker ZDPY for our Canadian friends, ZDPY, how we've positioned the company to capture value within the real estate and cannabis marketplace and create some pretty significant growth for our company. So thank you again for our hosts for having us today. Some forward-looking statements for everyone in the audience and all viewers to review. Please pay close attention to those as you're reading the rest of our information and slide deck. So what do we do, Zoned Properties? Essentially, as a full-service real estate development firm, we are focused on real estate services as the core of our business that lead to the most exciting value proposition for our company, which is real estate investments that will fuel revenue growth for the company. And we are a very specialized, niche-focused company in those highly regulated, highly complex emerging marketplaces. Today, 2022, regulated cannabis is about 99% of our focus as a company and a team, an industry that is just exploding as it emerges from the legacy side of the operating cannabis groups, transitioning into fully legalized and regulated status on a state-by-state basis. And we'll get into some of that as well. As a team, as a culture, as what we do with our clients, our partners, our development projects, our values are really important to us. In an industry as challenging as regulated cannabis, the culture of that team and who you work with is so vital. Sophistication, stewardship, how we interact with local communities helps guide the vision for the company and really helps guide us as we execute on our mission to provide those real estate services and real estate investments. And for us, that vision is all about creating more prosperous communities, and prosperous very intentionally, because prosperity is all about creating value. And we can create that value both for the communities, businesses, clients, partners, which we operate with, as well as ourselves and our team and our shareholders as a company. Where we are today. Again, for anyone in the audience listening or reviewing this deck that's unfamiliar with us, we've positioned the company for about the past 10 years. We were one of the very first public-facing companies, fully audited financials and SEC reporting that had the words marijuana, cannabis within our Ks and Qs. We understand that process of disclosure. We understand that process of compliance, both at the regulatory level related to being a public company, but also as that same sophistication of compliance and process, due diligence, procedure, underwriting. We'll get into all of that as part of our business model, but it's really important in a very complex industry like regulated cannabis. So we've spent all of that time learning those best practices, having significant failures in our history as the regulated cannabis space evolves, and we've learned directly from those, boots on the ground. So we position the company and where we are today with capital access to deploy that capital into those highly regulated industries like regulated cannabis, which on the real estate side, because it's so challenging and because of the history of the industry, there are these premium return profiles, but significant barriers to entry. So direct experience and the team, the culture is so vital to unlocking that value. We've been really focused on maintaining a clean capital structure. We're very lucky to have had a high performing team over the years with positive cash flow that funds the operations and the growth of the team and the company. So we haven't ever had to consider taking any type of majorly dilutive or toxic financing. In fact, quite the opposite. Over the years, we've actually bought back outstanding shares and done creative deal structures to protect shareholder value and our capital structure, with about 12.2 million shares outstanding. And only 2 million in debt, long-term, convertible at $5 per share, which is well above where we're trading today, just below $1. We've been trading in that 60 to 80 cent range recently. We'll get into where kind of that market capitalization compared to where the company's value is today, where that difference in delta may be and where we may go moving forward. And we've opened up access to new debt facilities. We have, as one of the longest standing operating companies that works with cannabis in the space, we've built a lot of capital relationships. So those are really important as we unlock the real value for zoned properties of being able to invest in new real estate properties, acquisitions, and creating additional leasing cash flow. Our existing portfolio today produces about 1.83 million in passive triple net investment grade lease revenue annually. We've got about 30 million remaining on those lease contract terms. All right, let's zoom out a little bit and talk about the market landscape. As I've said several times so far in this discussion, it's complicated, and real estate and community development is complicated on its own. So when you add in regulated cannabis, especially the status of cannabis today in 2022, the difference between federal regulatory structure and state by state market structures and local by local market structures, understanding that chessboard is so critical to succeeding in this industry. And as a non-plant touching ancillary service company that provides real estate services and capital, we got to understand that. So here's the high level for everyone in the audience. There's about 40,000 localities in the US. Those localities, counties, cities, townships, typically what happens when a state legalizes and regulates a cannabis program, whether that's voter ballot initiative or legislative action, which has been happening more and more recently, that trickles down to all of these local communities, cities, townships, counties, and they have to figure out the structure by which cannabis facilities will be governed and built. So that's our expertise, navigating the process of site identification, zoning, permitting for both third-party clients and our own investment projects. And if we look at that overall market and try and find that niche category for regulated cannabis, kind of the TAM, SAM, SOM approach, those 40,000 localities have about 15 trillion worth of commercial real estate. And we've got a cannabis industry which is being projected to produce, sometimes you see 100 billion in economic impact. I've seen some studies reference closer to 200 billion in economic impact, an industry that will basically look and likely surpass the regulated alcohol, spirits, beer, wine industry. And as of today, we have 37 states that have regulated and implemented regulated cannabis programs, with 5 more states coming on the ballot this midterm season. And that creates the challenge that we need to address, but that's the value we can create in our value proposition. So with a huge emerging industry like regulated cannabis, lots of commercial real estate out there, how are we going to fund and service the billions of dollars that will be needed in commercial real estate development to meet the needs of the emerging regulated cannabis space? And how do we, zoned properties, as a real estate services and investment company, capture that value for ourselves, for our team, and for our shareholders? It's split between capital and services. Those are the 2 major things that every real estate project will need when cannabis companies, real estate owners and investors that are positioning their real estate for a cannabis tenant or operator will need to address. And our best guess currently is there will be somewhere between $75 to $95 billion required to capitalize into cannabis facilities to meet the coming decade of need for this industry. That's a huge amount of capital. So where does zoned properties fit in this? we're kind of right in the middle. So we are not currently a real estate investment trust. We know just about all of the real estate investment trusts in the space that work with cannabis operators. Super important. That's been the majority of the capital that has come into providing the ability for this real estate to get financed and developed so far. But the real estate services is equally important because you have to be a steward of that capital. So again, we're not currently a REIT, but we play in that sandbox. We interact, we understand it perfectly. And as we'll get into through this presentation and discussion, we're certainly positioned to explore becoming a REIT as we focus on expanding our property investment portfolio. That fuels our market thesis. As I've mentioned, we've been at this for about a decade. We've worked on all kinds of regulated cannabis real estate projects, from very large million square foot size cultivation facilities on the agricultural side to very large industrial cultivation facilities, kitchen, processing, dropship packaging, retail sites, development sites. So we really understand the landscape and the cannabis market specifically because we have provided those services. We've been directly connected to the groups that are operating and developing these facilities. We really like retail dispensary real estate, and I'll go over why. There's about 9,500 retail dispensaries in the US as of around today. That benchmark, it kind of comes out on a monthly and quarterly basis from a few different media sources and database sources. But that's a conservative or an overestimated number, excuse me, because that captures approved licenses for retail dispensaries. That doesn't necessarily capture dispensary doors that are operating today. So it's very possible there's closer to 8,000, 8,500 working dispensaries this year. Our best projection is that that number is going to grow significantly over the next several years, and maybe even more significantly over the next decade. Potentially 15,000 plus retail doors across this country for dispensary operators. Again, we look at adjacent regulated markets, can look at pharmacy, liquor, coffee. What kind of retail distribution doors exist in our communities and the real estate marketplace to meet consumer demand? And so that number, I think 15,000, is likely a bit conservative. But one thing to keep in mind for the audience is that based on state by state regulatory structures and understanding that each state cannabis market regulates the number of licenses for each type of cannabis facility very differently. Some states are very limited in their license count. Here in Arizona, where Zone Properties is based in Scottsdale, Arizona, there's a limited license count. There's about 170 vertical licenses that produce only about 170 retail sites, versus in Oklahoma, California, Oregon, Colorado. These states have probably about 60% of those 9,500 retail dispensaries today, with unlimited license markets, open community zoning that allows for mass openings of retail shops. So it's very important to understand the evolution, the M&A side of that, the consumer cannibalization side of that. But what we believe is that direct to consumer real estate is the greatest value capture on the short, mid, and long term. We believe that because an industry like cannabis is driven by its consumers. This is a market that has significant consumer demand. That's what we call the legacy market. Decades and generations of cannabis experts that came before us, that are experts in this industry, but also consumers that have been purchasing and consuming cannabis for many, many years in that unregulated legacy market. So we view the greatest real estate opportunity as finding the pieces of real estate and investments that are most connected to those consumers and those brands. Our typical estimates, we look at retail doors as about 2 million on average. Some of those projects range from 750,000, depending on the location and real estate, up to 4 or 5 million. Depends how large the retail site is for the operator. The vast majority of these projects don't have the type of real estate expertise to deliver successful projects. It's one of the biggest risks in cannabis, especially for anyone in the audience that's a real estate investor or maybe looking directly at a single project. So critical to make sure there are people on those teams and in that brain trust that are using your capital that will be stewards of the capital and successfully deploy it. And most of those projects will need direct real estate capital. Again, an amazing part of the cannabis REITs have brought a lot of that capital. We know those groups have been primarily focused on larger cultivation and grow sites, 10, 20, $40 million sale leasebacks. We have the ability and the specialty to drive a strong pipeline for our own investment focus and underwriting process related to these smaller retail sites, which we view as the best direct-to-consumer real estate value capture and driving a really strong pipeline to diversify a portfolio. So there's four main components of our company as we tackle this process and our market thesis. Property technology, very critical to efficiency and effectiveness of tackling complex projects, really an opportunity for scale. That drives our advisory and brokerage. That side of our business, real estate services, is designed to help fuel our pipeline for considering real estate investments and in our investment portfolio. Lots of experience across the country, showing these states here in the past decade that we've been working at this directly in cannabis experience. This doesn't include other states where we haven't been directly contracted. So we've had work in just about every single state that has a regulated cannabis program, including Maine, Washington, Utah, Montana, Florida. But these states shown here are states where we have been hired and engaged directly by clients to assist them on the services side. And again, these two buckets of our company, this is our value model. We have real estate services, active revenue that we're targeting to fund the growth of the business and our operations. But the key here is that real estate services side of our business is how we look under the hood. It's how we directly feed our pipeline of potential real estate investments, which we're looking and targeting to build as passive revenue to fund free cash flow. I'm going to move through these quickly, and everyone in the audience hopefully has an opportunity to download this slide deck from our company page or from the platform page. A few important metrics about our growth model. That coverage nationally has led to hundreds of adequately zoned properties. That's why we're named zoned properties. To successfully deliver a cannabis real estate project, the local zoning permitting is one of the most important pieces, additionally to the capital. And we work with over 50 clients nationally. Our sweet spot is private SSO and MSOs. These are groups that are quietly building their businesses. They're strong negotiators. They have clear objectives, and they know the value they need, like real estate expertise. So typically we get hired on as their brain trust. And one of the things we love about private single state operators, SSOs, and multi-state operators, MSOs, is that a lot of them don't want to own their own real estate. So it creates a perfect symbiotic relationship by which we can help them identify new project sites for their dispensaries in new markets. We can help broker the transaction. So those are active service revenues for us. And then we can consider underwriting that project if they'd like us to, and consider investing, buying the real estate, becoming the landlord for those project sites. The beauty is in that model, when it operates in that capacity, of course, we look at third-party projects to consider in the pipeline as well. But when it's our own internal model, why our model was built the way it was, we know who our tenant is. And so that the risk is mitigated significantly, and the barrier to entry is overcome. So our current investment portfolio today, we own 4 major properties in Arizona. We've owned these for many years. We've spent the past several years really building out that real estate services side of our business. And now we're looking to turn back on the engine for our acquisition and investment side of the business. These 4 properties we own today are a considerable amount of our cash flow, and that cash flow that has helped fund the expansion of our team, the expansion of our business model. And as I mentioned earlier, we do about $1.83 million in passive revenue from these leases. Very strong, high credit operator here in Arizona, about $30 million left on those lease terms. And I really would suggest that anyone in the audience dive into some of those financial metrics versus where our company trades at a market capitalization today. You know, we are very confident that the value within our business will be unlocked, both as we tell the story to a broader audience, We've spent many years quietly building our business, building our client book, and now we're starting, and again, thanks to virtual investor conferences and OTC for the platform, we're starting to initiate telling that story to a much wider audience. We have a lot of value hidden within our tangible assets, our real estate holdings that we own outright. And while we've secured a debt facility with a banking partner, we haven't called that debt yet. So as of today, our real estate portfolio is debt-free. This is our trajectory. So what you're seeing here is the past 4 years of company operations, as well as the current year, 2022, with our expected gross revenue trend, as well as some projections for our company moving forward. Very important to understand what you see here in this chart is a reflection of us spending the past few years building the business model, setting a strong foundation, avoiding taking toxic capital, making sure that we have positive cash flow from operations so that we get to the point where there's a couple of really critical inflection milestones for our company. The first critical inflection milestone is today. We've secured with a banking relationship access to new capital. We are underwriting projects as we speak. We've already moved forward and taken action on securing initial projects. And we plan to deploy that capital with this initial tranche of debt, as well as use competitive debt moving forward without intentionally diluting our shareholders through low valuation equity raises. So that first inflection point, what I would highly suggest everyone in the audience keep an eye out for us as they're watching zoned properties, is related to the execution on these first few new acquisition projects. Those will set the stage for what we plan to do moving forward as we raise more capital and deploy that capital specifically for new real estate acquisitions that are accretive. Our target range tends to be the formula we use. And again, this is just a target. Lots of market factors can change these numbers, but we tend to look at bundles of properties. Again, the beauty of looking at retail doors and retail projects is you don't necessarily have to deploy 10, 20, $30 million into a single operation that if that operation has risk, the lack of diversity is challenging. So we look at kind of 7.5 million CapEx bundles and trying to aim between an 11 and 15% cap rate return on those. That is what is fueling the future 4 years of projected growth related to our company. Brokerage absolutely guides a huge growth trend for us. Again, the model is designed so that we interact directly with the projects and we capture value from various sides of the business. We've been a leader in the industry for many years. It's been very important to us, as I mentioned in the beginning, with our mission and vision, that we actually participate in helping shift this paradigm by doing that directly with organizations that are fighting for the advancement of regulated cannabis in the whole country and various state markets. We have direct knowledge of what's coming. We can stay informed about those regulatory changes and adapt our company as appropriate to capture the most value. It's also a great engine for how we bring in clients. Almost entirely our book of client businesses is referrals and word of mouth. So we have developed that reputation in the industry. We've also spent the past few years building out a sophisticated leadership team. We've brought on an amazing high-level but nimble team. We consider our operational side of the business relatively boutique. It allows us to adapt quickly to client needs, market needs, and capture that best value. Over the past 18 months, we've brought on a full-time chief operating officer, a full-time chief legal officer, as well as managing broker, director of our advisory services, director of real estate. This is the team that is driving the model. Quick overview, and we'll get to questions in a moment. I've seen quite a few coming through here. So again, highlights, we're an ancillary, non-plant touching company focused on real estate development services. We've had over 5 years of positive cash flow from operations, really important metric for us. And that metric, in addition to top line revenue growth and diversified revenue growth, I think are really critical for investors, shareholders, prospective investors to track the value of the company as a whole and the company's business opportunity. We own significant amount of square footage of undeveloped land that may be developed moving forward at one of our large grow sites here in Arizona, and many years especially in the context of the regulated cannabis space as a fully audited SEC reporting company. Tight capital structure, little over 12.2 million common shares outstanding. And finally, I'll end on this before moving to some questions here. Here's our investment thesis as a company. Again, very driven by direct experience in the space. We're really focused on these retail dispensary real estate investment opportunities. We've built out a significant pipeline and underwriting process, and that ability to access that market share is really where we have positioned the company to both deploy capital and realize return from that deployed capital. Our initial secured debt facility with our bank partner has opened the door to increase that debt facility in the future. Some specific numbers related to that 4.5 million. That is a 50% loan to value of one of our properties. That is about 33% of our passive cash flow. So full independent bank appraisal that gave us that 4.5 million at a 50% loan to value on that single property. That again is only about a third of our valued cash flow in our real estate portfolio today. So lots of property value to unlock there. And we are actively and aggressively pursuing our pipeline of investment opportunities. We want to obviously grow appropriately. I'm a big fan of a mentor and a colleague of mine in the space always focuses on the term GARP, growth at a reasonable price. We don't want to take risks that will put our shareholders in a position where they could be at risk, but we want to be aggressive in the way we pursue acquisitions and value creation to bring some value for our shareholders. And we do very, very strongly believe that it's those property investments and acquisitions that will create the meaningful revenue and earnings growth that will translate to unlocking shareholder value for zoned properties. Ideally, if we achieve our goal, the active real estate services side of our business is what funds the operations and the activity growth, while the investment portfolio free cash flow certainly could be considered for things like future dividends. Okay, I'm going to shift to questions here. I know we've only got about 3 minutes. All right, first question, great question. How do we mitigate tenant risk? I think the critical part of that is knowing the tenants, as well as knowing the markets. So that focus with real estate services, I think that's something that really differentiates us. And again, that positioning of zone between being a formal REIT and being an only real estate services company, we kind of view ourselves as a quasi-REIT. Certainly we may consider shifting the company to REIT status in the future when appropriate, especially as we move forward on investing and growing our investment portfolio and increasing that lease revenue. We want to be conscious of positive tax strategies that are appropriate, but it's knowing those tenants critically as operators, understanding their history, and knowing how they interact with the marketplace as a whole, locally, state, and nationally. Do they have brands and operational systems that resonate with consumers? Because that's how you capture consumer demand. Especially, again, on the retail side, we like that direct-to-consumer focus because at some point, as federal legalization moves forward, and we've seen a lot of signals that that's starting to occur, we might expect the cannabis industry to start to commoditize as a product base. So it's going to be those brands and those cannabis companies that resonate with consumers that will win the day. Okay, going through here, trying to take a couple more. How does a raising interest environment impact your property investment portfolio and expansion? Great question. It absolutely impacts us, especially as I mentioned, we're focused on using debt so we can avoid diluting shareholders. The first inflection point is using that debt to deploy into investments and acquisitions. The second inflection point down the road is when we can access healthy equity capital and appropriately rebalance the balance sheet. And obviously, if we can do that effectively, equity capital can service debt, and debt service line items can free up cash flow. So the banking relationship we have really competitive debt, in my opinion, for the cannabis industry as a whole at essentially prime plus 2%, and seeing some different capital deals that have been done at prime plus 5, prime plus 6. it's a really challenging environment. So you have to have the trust of your capital partners. And we've also built relationships with some great private investors that we're exploring potential debt raises with as well. All right, I think we just passed time. I'd love to take some more questions, but invite anyone to reach out to myself, to the company, my contact info here. Would love to have one-on-one conversations and field any additional questions. Thank you so much to the audience, and again to Virtual Investor Conferences for hosting.